Good afternoon. Welcome to the Business Broadcast. I'm Nikki Larkin. I'm the MD of Greenwich Accountants and also Director of Succession Planning. Today I am going to be taking you through, if you haven't filed your personal tax return yet for 21-22, I'm going to go through some tips and hints to try to make sure that you get your tax return in on time for the 31st January. Claim the reliefs that you are entitled to and try and make it as pain-free as possible. As we are actually at the end of a tax year, really, we've only got 4 months left for the 22-23 tax year. I'm also going to go through a few hints and tips of potential tax savings that you could still do for this year. So that will save you in the following year's tax. So please do, as always, ask questions as we go. I'm on my own Zoom today, so please do ask me questions, or at least say hi, so that I know I'm not talking into a void. But I'll try and take you through some useful things. Because what you don't want to do is submit your tax return and then get a scary brown letter from HMRC saying that something's wrong in it, and either asking you to do a check or having actual inquiry or inspection on it. So what we're trying to do is just let's make it right first time. Let's claim the things that you're entitled to, report the things that you have to, and get it right. So first of all, I'm just talk about the basics first of all. The easiest way to do your return, well, it's actually outsource it, but let's assume for now that you're doing it yourself. So you can file your tax return on your HMRC Government Gateway, or there are some quite low-cost softwares out there. TaxCalc's quite a nice one. We used to use it in our practice for a long time. It's really easy to use and takes you through the pages quite straightforwardly. Whereas if you're on the Government Gateway, it's a bit more complicated to try and find where you have to slot bits of information. So make sure you've got the access right. So either make sure you've got the access into the Government Gateway or have the right software. Either way, you do need to have access to your personal Government Gateway is the best way, because on there you'll be able to, you make sure that you've got the right UTR number, that's your unique tax reference. You can make sure that HMRC have got your most up-to-date details, for example, your address. It will have your date of birth, which hopefully that's never changed. And it will confirm if you've got anything either that you've overpaid in the previous year, or if you've still got any money outstanding to pay. It also will have on there your latest tax code. Now, I just want to, it's sort of a slight deviation, but it's an important thing, your PAYE code, because what can happen is if your the theory is with the RTI system, so real-time information system, is that as your employer will be filing your payroll record every month, so HMRC theoretically should have an up-to-date picture of what you've been paid, and therefore what they should see is your different sources of income. If you're older and already having a pension, they'll have that information as well. They will, from your P11D, see what sort of typical benefits you'll have, and from that they should be able to get an accurate picture of your tax position and therefore apply a correct PAYE code. What that does is assign how much of the personal allowance you're allowed to have, or if indeed you've utilised it all or even gone negative. So what has happened a lot, even though it's supposed to be that for all up to date, I see numerous examples where HMRC have given clients incorrect tax codes. I'll give a real example. Yesterday, just 3 of our employees got the wrong tax code. And it's like, really? That's so annoying. But because I've seen it in other clients, it's so So never assume that the PAYE code that you've been given from HMRC is correct. For example, the things that they get wrong is often they'll add on a month one, week one marker. And what that does is that doesn't apply a cumulative calculation for your income tax. So if you've got a month that's got, say, a bonus in, or say you didn't earn a lot of money earlier in the year, but you are just at the end, instead of using the cumulative figure and therefore adjusting to make sure you get the right tax for the year, it only calculates it in the month and just gives you 1/12 of the allowance. So when you get your bonus, that gives you often will take you into a higher rate where you might not normally be in a higher rate, which if it was over the whole year, you wouldn't be there. So then you end up getting overtaxed. So do always make sure you have a look at what the PAYE code is. Don't assume that HMRC have got it right, because the majority of times when a client has queried some weird new PAYE code, there is something wrong in it. Other things I've seen on there is 2 lots of company cars. So it's recorded the new company car coming in, but it hasn't taken out the old one that's been replaced. I've seen same with benefits in cars for medical insurance. So often seen double there, or completely wrong amounts. Another trick that I've seen that HMRC have often been doing, and this has been over the last 2 or 3 years, is putting in a taxable amount for dividends. Now, that you might be okay and say, fine, I'll pay my dividends through my tax code, the tax for it. However, you don't have to. What you should normally be doing is pay your dividends, keep your tax savings aside, and then once you file your tax return, then you pay your tax by the 31st of January the following year. Now, what that's doing is HMRC being cheeky, and they're getting their money in advance. And also, they don't know what dividends. Majority of companies, they give completely different dividends every year. So, yes, one year might have had a really good month, a really good year, and you got awarded 50,000 dividends. It might have been a really rubbish year this year, and you might have only got 10. Who knows? I know that mine often do fluctuate. So I recommend, why should they have the money earlier? I mean, you might be happy for HMRC to have it earlier. That's your personal preference. But if you don't, what I would say is keep it in your bank account, keep it in your savings account, building it up, but make sure you get that stripped out of your PAYE code. Don't pay it earlier. So that's about your PAYE code. Really do check that it's right, and because it does cause big problems, and that's often having the wrong PAYE code is often why, when a tax return is given to a taxpayer and they're saying, I don't understand, why have I get a lot of my income through PAYE, why have I got tax due? Or have I got a surprising refund? People don't obviously usually complain about surprising refund, but when it's tax due, what it usually is because they've got the wrong tax code, and perhaps they haven't been taxed had the wrong code. So, what you want them to have the right tax code, so they don't have any nasty surprises. They will expect to pay tax that's due from their rental income or their dividends or their capital gains, but if it's from their PAYE income, that's usually the PAYE code is wrong. So often, if you think about it, if you've got somebody that, if you earn over 120,000, that means your personal allowance is wiped out. So if you've got a 1257L personal tax code, but you were going to be, because I know either you've had some big promotion, or you've had a big juicy bonus, and it's taken you over 120,000, you don't have a personal allowance anymore. So if you're having a 1257 code, L code, that's assuming you do have the full personal allowance. And what that usually means is you're going to have about £5,000 of tax to give back at the end of the year, which, especially if you leave it to last minute, if you leave it to last minute, end of January, to do your tax return and find that you've got a £5,000 bill when you're paying off your credit cards from Christmas, not such a nice feeling. So try and make sure that your POI code is correct in the first place. Other things within your tax return is, firstly, I would say make sure you gather all your information together. Try, if you can, to keep it in one place. Doesn't necessarily have to be beautifully filed or something. Even just have a box and try and put that all together. Just so that when you then come to eventually getting around to putting your tax return together, it's all in one place and you don't forget it. Typical things that people forget about is if they've made lots of gift aid donations during the year. What I do is, because I usually do mine online, is I have a little folder in my email. So I just chuck them all in there so that when it comes to doing my tax return, they're all there together, so that I make sure that I get my gift aid on those returns. The other things, like things that they might forget about, so perhaps your P11D, you might have forgotten or mislaid that. Always, that's one of the classic ones that people forget. Oh, no, I forgot I had a company car. Oh, I forgot I had medical insurance. If it's not being coded out through your payroll, which some people's are nowadays, if it is being relied upon by being put through your PLMD, make sure you keep that. Also, dividends. People forget about, I've got, somebody might have £1,000 of Vodafone dividends or whatever they might have. Those dividends do need to be on the tax return. Yes, you do have £2,000 of tax-free dividends, which is lovely at the moment, but you still need to put that onto your tax return, especially if they're you do just have to put them on there. It's full stop. But if you have, say, for example, foreign dividends and you don't put them on there, you're quite likely to end up with a worldwide disclosure issue. And really, for a few little bits of dividends, that's complete pain to do. And it will cost you a lot of money if you haven't got insurance for that. So just make sure you get it right first time. There's a question that's come through before I go into the next thing about putting everything together. Let me just check. So, Ina, I'm not sure. I'm presuming you don't mind me sharing this because you have written it up on LinkedIn. It has got numbers in, so hopefully it's not personal. But here's a question. I've only started trading after the 5th of April. So I'm presuming that that's the 5th of April 2022. Have I am still also employed? Okay. So I get a salary from my employer as well as income from my own business. Am I required to do a personal self-assessment by end of January, or that'll be next year? Okay, so assuming that you started the sole trader business after the 5th of April 2022, no, you don't need to file a 21-22 tax return, so you're fine. You don't have to worry about the 31st of January 23 deadline. What you need to worry about is the deadline for 31st January 24. As you've got employment income and self-employed income, do realise that you're probably using all your personal allowance in your employment. You might even be using all your basic allowance as well. So make sure that any profit that you're getting from your sole trader business that you're putting aside and saving. One thing that often sole traders get hit by and don't realise is they put aside their tax for that year. All good, lovely. But what happens in the very first tax return if they've had reasonable profits. So if you've had a loss or if you've had very small profits, it's not applicable. But if you've had reasonable profits, you have to pay the tax for the year ending. So in Ina's case, for the 5th of April 23, which you'll have to pay by 31st January 24, but she will also have to pay for the same deadline the first 50% payment on account for the year 23-24. Now, how that's calculated, the HMRC just assumes that you will have exactly the same profit as the previous year. So you pay the first payment on account 31st January, and the second payment account by 31st July. Now, if you think about it, if you've got having your basis period end of 5th of April, you've already had your year end by the time you get to the 31st of July. So that's often why I encourage sole traders or people that are in partnerships to try and get their tax returns completed before the 31st of July, so that the second payment on account, if you've had a dip in profits or if you've got something to offset your taxable income in that year, you will just be able to just pay the correct balancing amount rather than the full payment on account. That's particularly if you're in a business that goes rapidly up and down. That's important to notice. Now, some people will just go, that's fine, I'm paying my payment account. It's, it's almost like a little savings scheme. It's there, it's done. However, if you do have huge differences and that's taking up a lot of your cash, do realise that when you file your personal tax return, you can edit your payments on account. So if you know that your business in the following year is not going to be doing so well, or for example, Ina, perhaps in her second year, she might decide, actually, I'm going to go full-time with my sole trader, I'm not going to do my employment anymore. So therefore, perhaps her total taxable income may decrease in the second year. You can go and edit your payments from account, and that's why it's really important to either do a forecast yourself, or if you've got an accountant, do that forecast with your accountant so that they can give an accurate payment on account. I have some clients, we have some clients that like to do a very accurate payment on account, and so we do get their tax almost to the penny on their payments on account, so that it's say they know that they're done, all sorted and safe. So it just means it takes away the uncertainty. Okay, so I hope that was useful. If there are any more questions, please do put them on. There's one thing I suppose also just to be aware with. I'm not talking about MTD today, but that is something that's coming in for self-employed people next year. So my colleague Lydia, who may even be watching at the moment, I know she's working today, busy bashing out lots of tax returns for our clients. I will be getting her on soon to talk about MTD, because what the key thing with that is, unfortunately, a lot of sole traders and people with rental portfolios, etc., are going to end up having to do quarterly tax returns. HMRC will say, it's for their own good and it's a good thing and it means they'll be on top of all their numbers, etc., etc. Unfortunately, to a lot of sole traders in business, small business owners, they'll just think, another lot of red tape and admin. So, but Lydia will, I'm sure, in the new year, come on and join with me and explain the good and the bad about the new system. So do watch out that is going to be something. So, you won't be just one tax return a year, it's going to be 4. Delightful. So, okay, other things for your tax return. I want to make sure, so you've got everything in your little box or on your virtual folder, so all together, because you want it all together so it's nice, efficient when you do come to it. Now, typical things that people might not realise that they can have reliefs on. So I already mentioned your gift aid. Make sure you do include that. Just a caution, if you've been claiming gift aid on donations, but you are not a basic rate taxpayer, so as in you earn less than £12,570 a year, you could potentially have to pay that gift aid back. So be super careful if you're ticking the box for gift aid. Make sure you are actually paying enough tax to claim that. So yes, so gift aid, make sure that you do claim that, because that gives you nice relief coming through. Also pensions. So if you're a high rate taxpayer and you're paying into a personal pension, you'll be able to get relief. Now, you may be able to as well on company pensions. However, there's lots of different ways that they can be set up. So be super careful about that. Sorry, I'm just having to, there's some dodgy thing. I've never had anything dodgy come up on there. I've blocked them, so that's sorted. So anyway, what was I saying? So pensions, yes. So be super careful though if you are claiming pension relief, because you need to make sure that there is actually relief, and you may have already received it through your tax return. So be very careful. Talk to your pension administrator how that's calculated. An increasing amount of pensions are done as salary sacrifice. So there isn't any tax relief because they're done as employer contributions. So you don't want to go and claim it and then find that you shouldn't have claimed it and then you've got to pay it all back. So be super careful. Other reliefs are, so if you've made investments, so for example, if you have put money into a brand new business and you've been able to do it under the SEIS scheme, or if it's a slightly older business, you've got it through EIS, make sure that you are claiming your SEIS or EIS relief, or even if it's a venture capital trust investment, claim your VCT relief. And those are all more complicated things. I'm not going to go through them on this session because it take well over an hour just to go through them. But if you have got them, make sure to consider making sure you're getting the income tax relief, but also make sure that you're getting the capital gains relief as well. Similarly, if you have an investment that's gone bust, make sure you get the capital gains relief, and in some instances you can turn it into income tax relief as well, but that's a bit more specialist, so it's best to talk to your tax advisor about whether you are able to claim those or not. Then another hidden gem is claiming for expenses that you've incurred. So, for example, there's been lots in the press about work from home. Now, during the pandemic, everybody was able to just blanket, even if they were only part of the year working from home, they were able to claim that. This year, I believe, is the last year you can do that. If you're going into the 22-23 tax year, you will only be able to claim work from home relief in your tax return if you are actually contracted to work from home. If you are actually a hybrid worker and there is a place for you to work, an office, then you're not going to be able to claim that. So be super careful when you come to do your 22-23 tax return. Another area to claim is there are some employers out there which are extremely tight, and what they do is you might be a salesperson, for example, and you're paying for lots of things for your clients, but you're not being allowed to claim them on expenses. Now, as long as they're not dodgy things, but if you are doing client entertainment for your PAYE work and you haven't been able to, your manager hasn't signed it off or whatever, in some instances, I'm not saying all because I can't see your detail, but in some instances you are able to claim that on your tax return, so you at least get the tax relief. Even though it's obviously better to get the money back from your employer, because you'll get £100 back if you spend £100. But if at least if you can't get that, at least get your tax relief on it from it. Similarly, I was looking at a return today with Lydia. If you've set up your home office and you had a desk during the time and you did that, something like that. Now, again, that's, you've got to be careful about what you can and can't claim, but some of those sorts of things you can put through. Next, I want to go through a couple more tax planning things. One's on pensions. So there's a certain maximum that you can do each year, potentially up to 40,000. But be aware that you can go backwards as well if you haven't used up the last 3 years. So it's important for you to review that either with your IFA of what reliefs you haven't already, what amount pension allowances you haven't already utilised so far. If you haven't used them, you can potentially put in a contribution and take it back, and that relief then can go back into prior year tax returns. Generally, you'd probably just do that on tax return amendments, or you could do it via a letter or another form, but just be careful how you do it. Make sure you do it in the right way, and make sure that you are putting it into a pension that you can claim the relief on. But it's very important to, try and use that, especially if you're like me, you're starting to think, oh goodness, am I ever going, how much am I going to end up in getting a pension? Do try and, these are the golden years. Yeah, but obviously the best thing is to try and put it all in as much as possible in your 20s, and then it will have grown loads by now. But if you haven't, if you haven't maxed out your pension pot, then do put some stuff in. Oh, good question. Alicia's come a question. I think she's asking this on behalf of somebody else. She's asking, if I'm claiming child benefit, do I need to repay this if I earn above a certain limit? Yes, Alicia, unfortunately you do. So there's a threshold. You gradually lose your child benefit if you are earning between £50,000 to £60,000. So you gradually lose it through that area. So you do have to give it back. So what some people do is they just stop claiming for child benefit. However, if you think you're going to be fluctuating in earnings, I would recommend keep claiming it. If nothing else, it's a tax-free benefit, and then or tax-free loan, and then you just give it back again. But it's important to make sure, it's important to put that on your tax return, and it's what you have to do is the person that earns the most has to put it on their tax return. So even if you perhaps are earning £15,000, if your wife or your husband is earning 65,000, and you're living as a family, then it will end up having to be paid back, because the higher earner is earning 65,000. So that's a really good point, well done, Alicia, because we've seen that before, which people don't like, but unfortunately it is another quirk in the system. There's some nasty thresholds. Between 50 and 60, you keep jumping from your 20 to your 50%. Your 20 to your 40%, and then also the 100 to the 120, because that is actually an effective 60% rate. So that's a really nasty place to be. I do a lot of tax planning I do with higher earners. We often try to just keep at the threshold at 100. I mean, obviously, if they're earning sort of 300,000 or whatever, then it's a bit irrelevant that they just go for more. That I've got another question come through, but one other point I wanted to make about planning is, if you do your planning right, I often, when I do planning with clients, I do it over 2 to 3 years. Sort of thinking about how much money do I need to get out, what is my potential earning threshold, but also balancing about what actual cash is needed. And then try and smooth that. So if you're a sole trader or a partnership, unfortunately, you're not able to smooth it. You have to be taxed as per the year that you receive it. However, that's one of the advantages of trading in a limited company, because then you can smooth your dividends. So even if you've had a lower profitable year, but if you've still got historical reserves, it's still a good idea to use up whatever threshold you want to get to, and smooth it through the years. Because what you don't want to do is have 1 year where you've not even used your basic allowance, and then the following year you're going into the higher or even the higher rates. You want to try and keep it quite smooth so that you're minimising the amount of overall tax that you're paying. Lydia's got a question saying, are there any changes to the work from home allowance? I haven't seen that. It changed a couple years ago, went from 4 to 6 per week. I haven't seen it go up, and they are being more strict about who can claim it. So be super careful about if you're claiming that. What I would generally recommend, if you are running a business, a sole trader or a limited or a partnership, I recommend you look at doing the use of home calculations rather than the tax-free work from home. So what you do is you would look at the actual costs and then you'd pro-rata them. There's some very clear guidance on the HMRC site about that. You either can do it on square footage, or we tend to just do it on rooms. But what's really important with that is, especially with the cost of energy, electricity and everything, if you're working from home, if you've got your business based from home, that sort of figure's going up and up and up. For example, I work from home a lot. However, I am contracted to be working in the office, so I don't claim that. But if your business is fully based from your home, that is something that you can look at. You may need to do a rental agreement. As long as you're not going above the actual cost, then there's no rental tax, but you still have to put it on your tax return with the cost in and the money going out. So, but do have a look at the HMRC guidance for that to make sure that you do that right, because you've got to be so careful that some people try and put through their mortgage figures through, and you're like, well, no. In some instances, potentially you could look at, you can't do that because you can't claim on capital, for example. It's you've got to be super careful in what you're doing. So make sure you read the guidance, and I do recommend that you get advice on use for home calculations. I've gone over my time. I haven't even touched the surface of all the different things with tax returns, but hopefully that it got you a few things to start thinking about if you haven't done your tax return yet, or if you are planning to make sure you're being tax efficient as possible for the 22-23 tax year. Do bear in mind that a lot of taxes are going up, thresholds are changing. So thresholds are changing. So be super careful when you're doing your planning to make sure that you're using the right rates and the right thresholds when you're doing the calculations. So as a summary, top tips are: 1, be organised, make sure you keep all your basic documentation together. 2, do declare everything that you're supposed to declare. You will not get away with it. It might not be for another year or 2 until HMRC sends you a nasty letter, but they will find out. They do huge amounts of big data mining now. So if you've got some bank account that you've got some funds going in that you're not declaring, or you've got multiple sources of income and things, they will catch up with you. So just declare everything now such rental properties. That's a classic one. They sift through all the data in the land registry, so they will see if you've got rental property. So first, be organised. 2, be honest and declare everything, but equally, claim for all the reliefs that you're entitled to as well. And 3, try and forecast as much as possible, so that then it's never a nasty shock to the system when you receive your tax bill. Okay, I hope that was useful. Please do DM me if you've got any questions that you didn't want to ask in this forum and just like some personal advice. Not a problem, just let me know. And I'll either, if I can't help you, I will certainly know plenty of tax professionals in our team that will be able to help you. So have a lovely weekend. Hope getting all ready for Christmas. I've already started my sparkles. Got my little countdown up there. But anyway, cheerio and have a super weekend.